Hello students, this is Purvi here. Today we are going to talk about the fourth chapter from Entrepreneurship, that is non-corporate forms of business. Forms of business. A private sector enterprise may be organized in various forms. It may be owned by individuals or a group of individuals. The forms can be non-corporate or corporate. Under non-corporate, there are sole proprietorship firms, partnership firms, and joint Hindu family businesses. While under corporate, there are joint stock company and cooperative society. Non-corporate firms. In non-corporate forms of ownership, the identity of the enterprises is not different from that of its owners. Owners are personally liable for all the debts of the enterprises. This form of organization can be set up without registration under the governing laws. Sole proprietorship, partnership, and joint Hindu family or Hindu undivided family business are the examples of non-corporate forms of business. Corporate forms. In corporate forms of ownership, the identity of the enterprises is separate or different from that of its owners. The owners cannot be made liable personally to pay the debts of the enterprises. This form of organization is required to get itself registered under the governing laws. Joint stock company and cooperative society are the examples of corporate forms of business. Forms of non-corporate business. Under the forms of non-corporate business, there are three types of organizations. Those are sole proprietorship, partnership, and joint Hindu family business or Hindu undivided family business. Let us discuss each one of these in detail. Sole proprietorship. As the name suggests, sole means single and proprietor means an owner. It is a form of business which is managed and controlled by a single owner. It is one of the oldest, simplest, and most commonly used forms of business organization which is owned, financed, controlled, and managed by only one person. It is also referred to as single entrepreneurship or individual proprietorship. E.T. Elborn has said that sole proprietorship is a business initiated and operated by one individual who carries all financial and administrative responsibilities, employing such assistants as may be necessary. While Edward Elborn has to say that sole proprietorship is a business unit whose ownership and management are vested in one person. The individual assumes all risks of loss or failure of the enterprise and receives all profits from its successful operations. Characteristics of sole proprietorship. The main characteristics of sole proprietorship are individual ownership, individual management and control, individual financing, unlimited liability, sole beneficiary, non-separate legal entity, and limited area of operation. Individual ownership means the business is exclusively owned by a single person. Individual management and control means all affairs of the business like what is to be done, how it is to be done, and when it is to be done, etc. are managed and controlled by the sole proprietor. However, Competent people can also be employed for efficient management. The third characteristic says individual financing. Now, proprietor arranges all finance through personal sources, which can also be from friends and other family members. He can also take loans and debts from financial institutions. The fourth characteristic is unlimited liability. The proprietor and the business are considered to be the same, and in case of any liabilities, his or her personal property can be used to pay off the business debts. Sole beneficiary. The sole proprietor is entitled to all the profits and losses of the business. The sixth characteristic says easy formation and closure. The starting and closing of this form of business is very easy, as there are minimum legal formalities subject to this form. The seventh characteristic is no separate legal entity. Now the owner and business are considered as one and the same. With the death of the owner, the business also comes to an end. The last characteristic is limited area of operation or scope. The scope of operations is limited due to limited finance availabilities and limited managerial abilities. Coming to the merits of sole proprietorship. Before starting a business in the form of sole proprietorship, an entrepreneur should evaluate its pros and cons. The merits of this type of ownership are: it is quick decision making, confidentiality of information can be maintained, it is easy in terms of formation and closure, the owner is the direct incentive recipient, the owner feels the sense of accomplishment, and there is the presence of flexibility of operations. Demerits of sole proprietorship. Now the demerits of sole proprietorship are: it has limited resources, it has limited life of business concern, there is unlimited liability, it has limited managerial ability, and it has limited scope for expansion and diversification. Suitability of sole proprietorship. After going through the pros and cons of this form, it can be safely concluded that the one-man control is the best in the world if that man is big enough to manage everything. The success or failure of an enterprise depends upon the intelligence, competence, and sensible decision-making capacity of the entrepreneur. Basically, this type of form is suitable when the capital requirement is limited. Also, confidentiality or secrecy is important. Market for the product is local, and goods are of artistic nature or demands customized approach. Also, when quick decision making is necessary, as well as the size of the venture is small. Legal formalities involved in sole proprietorship. A sole proprietorship does not need to be registered. However, in order to start a sole proprietorship, an entrepreneur requires certain industry-specific licenses. Example, to open a pharmacy, a license is required. A few general factors or formalities can be considered, which are the business name. If a sole proprietor desires, he or she can adopt a trade name for their business which however is not necessary. Service tax registration. Form ST1 is to be filed for registration if the taxable service exceed 10 lakh rupee for a financial year. VAT and CST registration. Now, value added tax registration is necessary for selling tangible goods within a state, and if there are interstate transactions, then central sales tax registration is required. However, now as per the new upgradation, GST is applicable, that is goods and service tax. Apart from that, PAN card number of the sole proprietor, bank account number in the name of sole proprietorship business, shops and establishment license, employees provident fund registration, importer-exporter code if import-export business is being carried out, and have to be compiled with. Payment of taxes. Now the sole trader should make sure that his business fulfills the taxation requirements. Legally, sole trader has to bear the taxes of the business. Partnership. A partnership is an association of two or more persons as co-owners to carry on a business and to share its profit and losses. Thus, two or more persons may form a partnership by making a written or an oral agreement to carry a business jointly and share its proceeds. According to John A. Shubin, two or more individuals may form partnership by making written or oral agreement that they will jointly assume full responsibility for the conduct of business. Also, according to Indian Partnership Act 1932, partnership is a relationship between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. Characteristics of partnership. Now, talking about the characteristics of partnership, the first one says two or more persons. It means partnership is formed by entering into a contract. So, there must be at least two persons who enter into a contract to form partnership. Also, minors cannot be admitted to partnership because they are incompetent to enter into contract, but they can be admitted to the benefits of a running firm. As well as minimum number of partners is 2 and maximum number of partners is 20. But in case of banking, maximum number of partners is 10. The second characteristic is agreement. When the partners enter into a contract, that means they make an agreement which can be oral or written. Written agreement is advisable as it helps in resolving disputes if arise in future. A written agreement between partners is referred to as partnership deed. The third characteristic is profit sharing. Now the profits of the partnership business are shared amongst the partners in an agreed ratio. It should be kept in mind that sharing of profits is the main feature of this form of organization. Partnership is not formed for charity. The fourth one says unlimited liability. The liability of partners is individually and collectively unlimited. This means that their personal properties can be disposed of to pay the firm's debts. The creditors can claim their dues from any one of them or all of them. The fifth one says implied authority. Any one partner can act on behalf of the firm and his acts bind the firm. The sixth characteristic is mutual agency. Now the business of the firm can be carried on by all the partners or any one of them acting for all. Thus, every partner is a principal as well as an agent. This means that each partner is liable for the acts performed by other partners. Also, each partner can bind other partners and the firm by his acts done in an ordinary course of business. The seventh characteristic says utmost good faith. The mutual trust and confidence is the main strength of partnership. Every partner should act honestly and give proper accounts to the other partners. The eighth characteristic says restriction on transfer of shares. Now no partner can sell or transfer his shares to anybody else without the consent of the other partners. If a partner wants to discontinue, he can do so with the consent of the other partners. And the last characteristic is continuity. A partnership continues until all partners desire to continue it. Legally, a firm dissolves on the retirement, death, bankruptcy, lunacy, or disability of a partner if not otherwise provided in the partnership deed. Merits of partnership. Now the merits of partnership are: it is easy in formation and closure. It has balanced decision making. It can access to more funds. The risks are shared, and the maintenance of secrecy of business is prevailing in partnership firm. Demerits of partnership firm. Now, the demerit of partnership firms are unlimited liability. It has limited resources. There are possibility of conflicts. There is a lack of continuity, and there is a lack of public confidence. Suitability of partnership. Partnership firm is suitable when more investments and better managerial efficiency is required. So partnership firm is suitable when capital and managerial requirements are higher as compared to that of sole proprietorship. Also, when enterprise falls in the category of being a small or medium scale enterprise, as well as when there is requirement for direct contact with the customer is essential. Consequences of non-registration of a partnership firm. Partnership firms in India are governed by Indian Partnership Act 1932. While it is not compulsory to register your partnership firm, as there are no penalties for non-registration. The Act does not provide any penalties for not registering with it, but it is advisable to register a partnership firm. If the firm does not get registered, a partner cannot file a suit in any court against the firm or any other partners for the enforcement of any right arising from a contract or any right conferred by the Partnership Act. A case also cannot be filed against a third party for claiming any right conferred by a contract. Also, the firm or any of its partners cannot claim a set-off or other proceedings in a dispute with a third party. Now let us talk about the registration procedure of a partnership firm. Registration can be done at the time of formation and even subsequently. An application has to be filed with the registrar of firms for the area where the business is located. The first step is application for registration. Now the application for partnership registration should include name of the firm, that is, any name can be adopted by the partnership firm except that it should not contain any words which may express or imply the approval or patronage of the government except where the government has given its written consent for the use of such words as part of the firm's name. It should also contain name of the place where business is carried on. Also names of other places where business is carried on. Date of joining of partners, full name and permanent address of all the partners, and duration of the firm. The second step is formalities for registration. Documents and fees that should be enclosed while formalities of registration are application for registration is prescribed from one which is signed by all the partners. Duly filled specimen of affidavit, certified copy of the partnership deed, and proof of ownership of place of business or the rental or leased agreement thereof. The third step is issue of certificate of registration. Now after receiving the above documents and once a registrar of firms is satisfied that the application procedure has been duly complied with, he or she enters the name of the partnership in the registrar of firms and issues a certificate of registration. Joint Hindu family business or Hindu undivided family business. Hindu undivided family business is a unique form of business as this is only present in Indian society. HUF is governed by Hindu law. As defined under Hindu law, as a family which consists of male lineally descended from a common ancestor and includes their wives and unmarried daughters. It arises from status and not from legal contracts. HUF is the best form to save taxes. Schools of law under HUF. Now there are two schools of law governing HUF that are prevalent in India. The first one is Dayabhaga. It is prevalent in West Bengal and Assam, where a son acquires a right in family property only after the death of his father. The second school is Mitakshara. This form is prevalent in the rest of India, where the son acquires a right in property from his birth. Now, what are the various essential conditions for HUF? Those conditions are: it should have minimum 2 members in a family and there should be an existence of ancestral property. Now let us talk about the various characteristics of HUF. The first characteristic is creation. It arises by status or operation of Hindu law. The second is membership. A male member becomes a member by merely taking birth in a family. Even an adopted child can be admitted to HUF. Management. The eldest male member manages the affairs and is known as the Karta of HUF. Other members are known as co-partners. The fourth characteristic is liability. The Karta has an unlimited liability, whereas the co-partners have unlimited liability. The fifth characteristic is rights of accounts. Only the Karta can check the accounts and not the co-partners. The sixth one is minor as member. As a male member by taking birth in the family becomes the member of HUF. Dissolution. HUF continues until 2 members in a family exist. However, If all members mutually agree, HUF can be dissolved. The last characteristics of HUF is implied authority. Only the implied authority to bind the HUF, and this is the reason he has an unlimited liability. Now let us talk about merits of Hindu undivided family. Merits of operating an enterprise through HUF are effective control. There is a continued business existence. It has limited liability of members, and there is increased loyalty and cooperation. Demerits of HUF. Demerits of HUF are: it has limited resources, there is an unlimited liability of Karta, there is a dominance of Karta, and there is limited managerial skills. Suitability of HUF. HUF should be formed when there is some ancestral property, where tax savings are to be ensured, and a basic family unit of husband and wife exists. Let us discuss about the legal formalities involved in HUF. The legal formality involved in HUF are capital, members, suitable name, form a deed, apply for PAN, open a bank account, and others. Talking about capital, it can be in the form of ancestral property or assets gifted by family and friends or received by the HUF through a will. Members. Now there should be minimum 2 members which are required for the formation of HUF. Suitable name. A name which does not violate the laws or have a negative impact should be selected. Form a deed. Formation of HUF is through a legal deed or agreement. It specifies the name of Karta, corporationers, address, and source of funds in the corpus. Apply for PAN. After executing a deed, the Karta is required to obtain a permanent account number for the HUF. PAN is mandatory requirement for the formation of HUF, as all the financial transactions shall carry PAN. Opening a bank account. After the PAN has been allotted, the Karta is required to open a bank in the name of the HUF. Only transactions related to HUF should be routed through this account. Others. Official stationery such as letterheads, envelopes, etc. should be printed with HUF's name for all communication. Also, the Karta will have to invest in tax saving instruments and file tax returns on behalf of the HUF. Now let us give a glance on some important facts of HUF. The important facts of HUF are: first, the adopted child can be a member but not a corporationer. The daughter, after the marriage, ceases to be the member of her father's HUF. A female, after marriage, becomes a member of her husband's HUF. A widow cannot be the Karta of HUF as she is not a corporationer. The HUF continues to exist in the bands of female members after the death of male members. HUF is a separate entity for income tax purposes under the provisions of Section 231 of the Income Tax Act. Students, This was the fourth chapter from Entrepreneurship. Thank you.